Are you interested in investing but don't have a lot of money to start with? Well, you're not alone. Many people believe that investing is only for the wealthy, but that's not true. In fact, you can start investing with as little as $50 or $100. In this video, we'll show you how to start investing with little money. We'll cover the basics of investing, the different types of investments you can make, and how to choose the right investment for you. But before we dive into the details, let's first understand why investing is important. Investing is a way to grow your money over time. By investing, you can earn a return on your money that is higher than what you would earn by keeping it in a savings account. This is because investments have the potential to generate income and increase in value over time. Investing can also help you achieve your financial goals, such as saving for retirement, buying a house, or paying for your children's education. Now that you understand why investing is important, let's move on to the next segment, where we'll discuss the different types of investments you can make. There are several types of investments you can make, each with its own risks and potential rewards. Here are some of the most common types of investments. 1. Stocks. Stocks are shares of ownership in a company. When you buy a stock, you become a part owner of the company and can earn money through dividends, a portion of the company's profits, or by selling the stock for a higher price than you paid for it. 2. Bonds. Bonds are loans made to companies or governments. When you buy a bond, you are essentially lending money to the issuer and earning interest on that loan. Bonds are generally considered less risky than stocks, but they also offer lower potential returns. 3. Mutual funds. Mutual funds are a collection of stocks, bonds, and other investments that are managed by a professional fund manager. When you invest in a mutual fund, you are buying a small piece of the entire portfolio. This allows you to diversify your investments and reduce your risk. 4. Exchange-traded funds. ETF are similar to mutual funds, but they are traded on stock exchanges like individual stocks. ETF also offer diversification and can be a good option for beginners. 5. Real estate. Real estate can be a good investment if you have the money to buy property or invest in a real estate investment trust rate. Real estate can generate income through rent or appreciation in value over time. These are just a few examples of the types of investments you can make. It's important to do your research and understand the risks and potential rewards of each investment before you invest your money. In the next segment, we'll discuss how to choose the right investment for you. Now that you know the different types of investments available, how do you choose the right one for you? Here are some factors to consider. 1. Your goals. What are you investing for? If you're saving for retirement, you may want to consider a mix of stocks and bonds. If you're saving for a short-term goal, like a down payment on a house, you may want to consider a more conservative investment, like a high-yield savings account. 2. Your risk tolerance. How much risk are you willing to take on? Stocks and real estate can offer higher potential returns, but they also come with higher risk. Bonds and savings accounts offer lower potential returns, but they are generally considered less risky. 3. Your time horizon. How long do you plan to invest? If you have a long time horizon, like 20 or 30 years, you may be able to take on more risk and invest in stocks. If you have a shorter time horizon, like 5 or 10 years, you may want to consider a more conservative investment. 4. Your budget. How much money do you have to invest? Some investments, like real estate, require a significant amount of money to get started. Others, like mutual funds and ETFs, can be purchased with as little as $50 or $100. 5. Your knowledge and experience. How much do you know about investing? If you're a beginner, you may want to start with a more simple investment like a mutual fund or ETF. As you gain more knowledge and experience, you can consider more complex investments, like individual stocks. By considering these factors, you can choose the right investment that aligns with your goals, risk tolerance, time horizon, budget, and knowledge. In the next segment, we'll discuss some tips for investing with little money. Investing with little money can be challenging, but it's not impossible. Here are some tips to help you get started. 1. Start small. You don't need a lot of money to start investing. Many mutual funds and ETF can be purchased with as little as $50 or $100. You can also consider investing in fractional shares, which allow you to buy a portion of a stock or ETF. 2. Use a robo-advisor. Robo-advisors are online investment platforms that use algorithms to create and manage a diversified portfolio over you. They typically have low fees and can be a good option for beginners. 3. Take advantage of employer-sponsored retirement plans. If your employer offers a 401k or similar retirement plan, take advantage of it. These plans allow you to invest pre-tax dollars, which can help you save money on taxes. 4. Automate your investments. Set up automatic contributions to your investment account each month. This can help you stay consistent with your investing and take advantage of dollar-cost averaging. 5. Avoid high fees. High fees can eat into your investment returns over time. Look for investments with low fees. like index funds and ETFs. 6. Stay diversified. Diversification is key to reducing your risk. Consider investing in a mix of stocks, bonds, and other investments to spread out your risk. By following these tips, you can start investing with little money and work towards achieving your financial goals. In the final segment, we'll summarize what we've covered and provide some additional resources for investing with little money. In this video, we've covered the basics of investing with little money. We discussed the importance of investing, the different types of investments available, how to choose the right investment for you, and some tips for investing with little money. Remember, investing is a long-term game. It's important to stay consistent with your investments and avoid making emotional decisions based on short-term market fluctuations. If you're looking for more information on investing with little money, here are some additional resources. 1. The Boglehead's Guide to Investing by Taylor Larimore, Mel Lindauer, and Michael Leboeuf. This book provides a comprehensive guide to investing for beginners and includes tips for investing with little money. 2. The Simple Path to Wealth by J.L. Collins. This book provides a simple and straightforward approach to investing and includes tips for investing with little money. 3. The Motley Fool. The Motley Fool is a popular investment website that provides information and advice on investing. They offer a range of resources for beginners, including articles, podcasts, and a free investing starter kit. By following the tips and resources we've provided, you can start investing with little money and work towards achieving your financial goals. Thanks for watching.